Hello, everyone. This is your market update for Thursday, October 16th, 2025. We're going to get right into the charts here. Gold futures currently trading at $4,252. We are comfortably above the trend line. If they finish the week above the trend line, I would say the odds favor that mini blow off top like we saw in 2006, where prices could go to 44, 45, and maybe even 4,600. I think this will probably finish before October ends, and then I think we'll probably see a sharp pullback. If we study the 2006 blow off top, prices rallied, I think, 36% before they collapsed 25%. And I have a new line on here. The red line represents the upper boundary of the gold cycle indicator. Usually prices near this level, maybe exceed it briefly, and that times almost every top. Every once in a while, we'll see prices extend above that into a blow-off phase like we saw in 2006, and they can reach the purple line. If we go over to today's chart, I'm get rid of the trend line here. That purple line currently is $4,419. So if we see prices exceed the purple line here in the next week or two, that would probably be the limit for this blow off top, and that's when I think we could see a sharp reversal. And again, I think we'll probably see a minimum of a 20% pullback to maybe 25%. We could come all the way back to this 3,500 level. The last time prices, I think they came all the way back to the 200-day moving average. So the green line represents the 200-day moving average. So after exceeding this level, they fell 25% and nearly tagged that. If we do that today, that level is currently, I think, around 3273. So this is going to continue to rise, and in a month or two, it'd probably be around 34 or 3,500 when I think we'll see maybe that pullback to the 200-day moving average, which would be our next major buying opportunity. Over to silver, currently trading at $51.96. We're kind of stalled here around 52. I think we can extend further, maybe towards $60 if gold continues its breakout through, say, 43 and towards 4,400 plus. I think silver should definitely probably near $60, and we could even see a mini blow off top above $60. If we go over to Google Trends for searches for silver coins, right now this just goes back to COVID. We're at 65 in I think January, February of 2021. We had that mini silver squeeze, and it got to up to 100 back then. So we're not even there. Retail interest, I think, is turning up, but it's nowhere near extremes. If we look even further back, this goes back to 2004. This was the April 2011 high when silver hit $50. Again, searches for silver coins, and we're just down here at a meager 53. It sounds like to me that there's plenty of silver in the United States. I think the refineries are actually backed up with junk silver and scrap silver. I think they're backed up 4 to 6 weeks, and I believe wholesalers even stopped receiving junk silver and scrap silver. So it sounds like the shortages we're seeing are mostly over in Europe, in London at the LBMA, and maybe in India. But right now, the United States is flush with silver, and I think it'll just take a matter of time before that silver makes its way back over to the London markets. But in the meantime, we could see a spike here. Over to platinum, currently trading at $1,705. Need some upside follow through here, basically above this pivot here around 1726. We get a couple closes above that, then maybe we can extend towards 1800. GDX, we're going to look at the weekly chart, up 7.51%. It looks like we might hit that target here, the 4-year base. The target was around 85. That seemed really unreasonable or impossible, just 6 months ago, but here we are almost nearing it with a high yesterday of $81.74. So we could achieve that target here in the next week or two. Note that the MFI here is the most overbought it's been in a long time. And then lastly, I'll leave you with the GDX to gold ratio. We did hit 0.20 here, and now we're pulling back. As I noted before, that miners have been kind of fading as gold continues to new highs. Miners have slowed down a bit here. I don't think we're going to make it through this long-term base here at 0.21 right now. Maybe later we could test it here in the next week or two, but I don't think we're going to see a breakout above it. And what happens next really depends on gold. If we see another kind of a sideways consolidation, then it's possible miners could outperform gold and break through this level into next year. But if we see gold with a 25% correction, I would be really surprised if miners didn't at least match that down 25%. But more than likely, they would probably go down 40 to maybe even 50% in that scenario if gold corrects 25%. So I think it'll be a little while before we break out to new highs here in the GDX to gold ratio. But all in all, I like what I see, and this will probably break out maybe in the next year or two, and that'll confirm a new bull market in gold miners. So that's it for now. Have yourself a wonderful day, and we'll talk to you later.